The market sell-off continues. Although we are off the lows, the S&P is still down about 2% on the day. Nasdaq's down just over 2, maybe 2.2%. So it's an ugly market. I have no new trades today, only because the short ideas or the downside bias ideas that I'm getting are just so extended to the downside that I don't think it makes sense to go to take a downward bias on these names until there's maybe some type of rally back, and then I can reestablish some downside positioning. On the flip side, I also don't really want to be taking any more long positions in this market because it just doesn't make sense. So what I did today, I just did a little pruning. I had some more profits to take on the downside. I also had some upward bias positions that were doing okay. So I ended up taking either small profits or small losses. I'm actually kind of decreasing my entire exposure to the market until we can get some type of direction. I mean, right now the general direction is down, but I want to see it come back, maybe rally, a little reflex rally, and then maybe reestablish some downside positions again. So no new trades today. I'm sitting tight, just doing some pruning. Let's take a look at what we did. All right, first thing I did was I took off this bull call vertical off of AbbVie. You see here, it was doing really well through this turbulent market. Came off, kind of hit its 50-day, its 20-day, had this move back higher. So I kind of thought that, okay, this thing is going to bounce back up, and I was anticipating it going up into the green. I was wrong. This thing completely broke down. It's really not worth holding at this point, so I just lick my wounds and move on. So what I did today here is I bought back these May 20 165 calls for 14 cents, and then I went ahead and I sold these May 20 160 calls for 50 cents, resulting in about an 80% loss on the trade. But you know, it's not working, so I got to get out of the way. Here is AGL. I went long puts on this. You can see this is the weekly chart. It's coming in. Here's the daily right here. It's coming in again today. It's down another 3%. This is kind of thin, this option, so instead of taking half off, I just unwound the entire thing. So here I had the July 15 puts, $20 strike price. I paid $2.60 for them, and I ended up getting out at $3.72. That represents about a 43% return on the trade. I did the straddle on Apple. I guess it's hanging in there pretty tough with the way the market is going, but just not really moving the way I want it to move, either to the downside or the upside. So I decided to just take this off. So I had already taken half the position off. I took the other half off today. I closed it out. So in the end, I ended up making about 4% on this trade on the second batch, and I made about 6% when I unwound the first batch. So all in all, let's call it a 5% gain on this straddle. Okay, this is FIS, Fidelity National. I went with the put vertical here. Closed it out today. You know, see it came off a little bit today. It's down about 2.3%. So in the end, I bought back the May 20 95s for $2.50, and I had to sell the May 20 100 puts at 507. So in the end, net spread, I made about 30, call it 35% on the trade. So I'll take it in this market. All right, so this is Gamestop Gma. I put on this put vertical, the bear put vertical. You could see today the stock is down 10%, so that's working in our favor. So I had originally, I had unwound half the position on the 5th, and then today I unwound the next portion of it. So I went ahead and I bought back the puts for $12.26, and I had to sell the May 20 puts 122 strike price for $15.46. So in the end, I made about 66% on this trade, the second tier of this trade. On the first tier, I made about 54%, so it's decent. I'll take it. All right, this is Bumble, BMBL. I just went long puts here. You can see today it's having a rough day, down 5.8%. So what I did on this trade, I sold it in 2 tranches today. So in the morning, it came down. I had bought these puts. These are the May 20, 22.50 strike price. I bought them for $2.35 this morning. I sold the first batch at $3.40. It's about a 45% return. And then later on in the day, I sold the second half. The ones that we bought for $2.35, I sold those for $3.65. So in the end, represents about a 50% return on the trade. All right, so for Home Depot, I had put on this bear put vertical, and it sold off this morning, but it's actually, this is the weekly chart. So it's up for the week, but I closed it out this morning. I closed out half this morning. So I basically, so what we did is we sold the July 15th puts, sold them for a $2.95 strike price, sold them for $14.29, and then I bought the July 15th $300 strike price puts for $16.37. So I unwound half the position today. That turned out to be about a 20% gain on the trade, and I have the other half still open. All right, this is International Flavors and Fragrances, IFF. So I put this put vertical on, anticipating that this thing was going to fall a little bit more than it has. I mean, you can see here, it came up, it tested that's the 50-day, and it bounced off and it came down, but it's just been hanging tough. Today it's down 1%, but given the market is down almost 3%, I was expecting something a little bit stronger. So it's holding tough. I decided to pull the plug on it. So I sold it in 2 tranches this morning. So in the end, on the first batch, actually on the first and second batch, I made about 5% on the trade, only because it just wasn't acting right. So I had sold the June 17th puts, $115 strike price for $3.69, and I bought them today for $3.27. And I went ahead and I bought the May 17th puts, $120 strike price, and I bought them for $5.40, and I sold them for $5.07 today. So if you take a look at the spread, it's about a 5% gain. Okay, I put this bear put vertical on TripAdvisors, and you can see between Friday and today, the stock has really come down hard. It was trading around 26 bucks when I did the trade and hit a low 21 today. It's off about almost 4% today. So I decided to take the profits on this one. So you can see here we sold the May 13th puts, $24 strike price. We sold them for $1.04, and then we bought the May 13th puts, $26 strike price for $1.99. And today I had to buy back those puts for 89 cents, and I ended up selling the puts for $2.14. So in the end, that represents I did them in 2 tranches here. So the first batch I made about 31%, and on the second batch, where I sold the puts for $1.30, I'm sorry, I bought back the puts for $1.30, and then I sold the puts for $2.88, and that represents about a 66% return. So all in there, call it a 40% return round trip, give or take. Okay. This is Marathon Petroleum. This is the weekly chart. It is off today with the rest of the energy sector. I like it, and I took half off only because there was some small profits there, and I'm trying to decrease my long exposure to the market at this time until we see a turnaround. So we took half off. All right. So this morning, I had sold the July 15th calls, $95 strike price, and I bought the July 15th calls, $92.50 strike price. In the end, I unwound half the position this morning for about a 13% return. I think this is impressive given this huge down market that we're in, that we're actually able to take some small profits with companies with an upside bias or strategies with an upside bias. I left the other half open because I think the chart looks pretty strong. It's held up really well through this downturn, and perhaps if we do get a reflex rally, this thing will be a market leader. All right, so LMT, that's Lockheed Martin. Again, this is the weekly chart, holding up pretty well through this entire downturn. Today it's off a little bit, but again, I had some small profits looking to maybe, because I'm taking so many profits on the downward biased trades on the short side, it's leaving me super exposed to the upside, right? So I'm just going to try to trim that down a little bit, just prune the portfolio to try to get a little bit more balance. So this one here, I closed out half the position. So we sold the September 16th 445 calls for 27.06, and we bought the September 16th 440 calls for 29.56. You can see where I unwound them, and you know, it was a 2% gain. We'll call it break even, but I just wanted to prune my upside exposure. You can see here with the market actually coming back off the lows, this trade is profitable again here by 10%. So I guess I'm glad I left half on. Okay, this is Occidental Petroleum. This is the weekly chart, so you can see it's hanging tough. I don't think I have it for a daily, but it is off a little bit with the energy complex today. Given where the market is and given the strength that this is seen, and again my need to decrease my upside exposure, I took half the position off. So you can see here we had sold the July 15th 57.50 calls for $8.05, and then we bought the July 15th 55 calls for $9.46. So I unwound it today for a break even. Call it break even. It's up about 3%. But it was just a good opportunity for me to prune some of the upside exposure. I keep saying that, but I'm just trying to get the point across. And I left the other half on because the chart doesn't look all that bad. All right, this is L3 Harris. I put a bull call vertical on this. Here's the daily chart. Stock is off 1.3% today. I bought this earlier on because it appeared that it was going to hold its support and maybe swing higher. Didn't really pan out, so I decided to take half off of this position today. So you can see here, and I actually took it off with a profit. So I had sold the August 19th 250 calls for $10.94, and I bought the August 19th 240 calls for $15.45. I ended up unwinding half the position today for about a 3% gain. And the other half that's open seems to be rebounding a little bit. So the remaining position is up about 8.8% today. So, or 8.8% since I initiated the trade. So we took half off today. This is ODFL. This is Old Dominion Freight Line. I put the bear puts vertical on this. You know, the stock on the weekly, it hit its 20, it hit its 50 week, came off a little bit. You know, it seems like it's starting a new downtrend here. I decided to take half off because we had some profits. So we had sold the June 17th 270 puts for $9.80, and we bought the June 17th 280 puts for $13.40. Unwound half the position today. Represents about a 33% profit in the trade. This is APA Corp. Did the bull call vertical on this. You can see that the company, the stock is in a pretty solid uptrend here. It hit its, this is going to be its 20-week moving average and started bouncing off, so we initiated the trade. Coming in a little bit for this week, but in the end still looks strong. I took half off though. So we had sold the June 17th 42.50 calls for $2.79, and I went ahead and I bought the June 17th $40 strike price for $3.87. So I unwound half the position today for a return of about 20%. And last update, so this is the daily chart for Cigna CI. You can see Friday had an outstanding day, good earnings. Today, hanging tough, it's down 1%, but again, where the market is, I'll take it. Seems to be in a nice uptrend, bouncing off of its moving averages higher. I decided to take half off today. So with this company, we had sold the July 15th calls, 270 strike price for $7.16, and I bought the July 15th calls, $260 strike price for $11.24. I unwound it today for about a 20% gain in the trade. And that's what we got. I'm thinning out the portfolio a little bit, seeing where this market ends up, and I'm hoping that we get some type of reflex rally here so I can continue to unwind some of my long exposure. You can still see that even with the changes that I made, my upward bias is just getting way too big. So I got to start pruning this. Hopefully we'll get some type of bounce that'll allow me to get out of to take some profits here, and then I also like to increase my downward bias once the timing is right. All right, thank you.